Welcome back, value investors. In this video, I'm going to be looking at a shoe company by the name of Crocs. You're likely familiar because these shoes really stand out. They're not the prettiest shoes, but boy, they are popular, especially among kids. I'm going to take a look at the company, value the company, see if it's discounted or if it's overpriced. And then I'll make a decision on either buying shares of Crocs or not buying shares. I don't own shares of Crocs, but I've seen a couple of investors on YouTube have a positive opinion on Crocs, and they're investors that I respect. So I did my own analysis, and I'd like to share that with you. Before I jump into the analysis, do me a favor and like my video and subscribe to my channel. And please leave comments on Crocs. Tell me what you think. I'm sure I'll get a couple of comments on the shoes and what they look like. They certainly grab a lot of attention because they have pretty interesting designs. I've developed a process over the years to use and make a decision whether I should buy a stock, hold it, or sell. And the first area that I look at is all about the company. Do I like the company? Do I like the industry? Do I see myself as a part owner in this business? And do I like the management team? Next, I take a look at the balance sheet. Is the balance sheet in good condition? And a good test for me is debt. Is debt less than 3 times EBITDA? Now, the price on the stock. I want a discount. I'm a value investor. I like buying stocks at a discount. So, am I going to get a discount on this stock? And based on the answers to those questions, I'll buy, hold, or sell a particular stock. The story on Crocs is interesting. A group of guys that really like boating ran into a particular type of shoe that really did well on boats. And they liked them so much, they thought, hey, we should really grow this type of category for boaters and people that want shoes that can take a little water. So they bought the company and they renamed it Crocs. And ever since then, this has been a shoe that's really stood out. And they have the classic look of the Crocs shoe, which I'm very familiar with. I've never owned Crocs. My wife just bought a pair recently, and it was because her doctor recommended, hey, you got to try some Crocs because they're very comfortable and they're good on your feet. So doctors are recommending them. And a lot of people that I know have tried Crocs simply because they're really comfortable. They also have some really, I'm going to call unusual designs. And I think they're grabbing a lot of attention, especially among young people who really like the designs and the creative aspects of the shoe. So who am I to tell anybody about fashion? I know my strengths and weaknesses, and fashion is definitely in the weakness category. I just look at a company from their financials, and I let other people determine what is cool and what is not cool. But overall, Crocs has been a really growing company. It's been an interesting phenomenon here in the United States. And these guys are growing internationally very well, which is really interesting. So overall, really creative company. And it was really interesting to take a look at how they have grown over the years and how successful they've been. Crocs acquired a brand by the name of HEYDUDE. And this company really showed really good growth when they were independent of Crocs. And now they're beginning to grow. But there was a couple of years where this didn't look all that promising to Crocs and it held the stock back. But I think this brand is beginning to take off, which is good to see. It's not a majority of Crocs sales, but it really exists. It is good that Crocs is diversifying and looking at other brands that they can bring into the fold. This company, Crocs, reminds me of Deckers Outdoors. Deckers Outdoors started with deck shoes, and then they acquired UGG, and UGG did really well for them. And then they acquired Kupa or Kuna, which is a running shoe. That shoe is so popular now. So Deckers Outdoor really did a nice job of acquiring other companies and continuing to grow. It looks like Crocs is trying to take on that type of strategy so they can continue to have nice high growth by both growing the Crocs brand and having a new brand in HEYDUDE and growing the company. Looking at the most recently closed quarter for Crocs, their revenues did really well. They grew by about 6% overall. Looking at particular brands, Crocs itself grew really nicely, overall 11%. In Asia, Crocs is really growing, which is really good to see. In North America, it's just a consistent growth. Direct to customer sales, which is interesting, really grew 15%. So establishing that relationship with the consumer is something that Crocs has been doing well. HEYDUDE sales, not as good. They went down 9% overall. Direct to customer sales did go up 15%, and digital sales went up. So the HEYDUDE brand needs to recover. It needs to start growing and really kind of pull its own weight. So that way it could be a profitable category for Crocs. That'll be important to take a look at. The company repurchased shares, $150 million worth, and they're doing a nice job keeping their balance sheet healthy. Taking a closer look at their income statement, let's look at some highlights. First, revenues were up 6%, and their gross margins are expanding. Very good to see. The earnings per share grew 6%. Very good to see. If the company is growing top line at a good rate and also growing profitability at a good rate, that's a really good recipe. I like that. Looking at where sales are happening for the two brands, first, Crocs makes up 75% of revenues, while HEYDUDE makes up 25%. Geographically, their main market is North America, but Asia is really growing fast. Europe and Latin America make up the last category. So it's interesting to see that they're growing in Asia. Obviously, that's a great market. So hopefully they continue to do so. Their digital penetration, 38%, and they have a direct to customer model. They sell 47% of their revenue through direct to customer. That's a very high amount, and it's a strength for Crocs. If they have a solid relationship with the customer, one, better loyalty. I think they could probably get good data back to make their company even better by designing shoes and distributing in a way that really pleases the end consumer. And overall, they could sell more products to that particular customer. So it's very good to see that their direct to consumer business is doing really well. It's one of the strengths of the company. News on Crocs. Most recently, Nike had a bad earnings and their stock tumbled. And Nike's the biggest player in the shoe market, so it brought everybody down. As a value investor, that's actually good news. If you give me a discount on a stock that has good value for no apparent reason other than a competitor doing bad, that's a good reason for me to buy. So that's actually good news for me. Analysts have really liked Crocs. As I look at the company, many analysts are saying, hey, Crocs is a good value. They're discounted, they're growing, and it's a good stock. Crocs provided updated guidance on where they expect they're going to finish the year. It looks like total revenue is going to grow 10 to 11%. That's very good growth. It looks like earnings per share are going to fall between $11.55 and $11.85. So I'm going to use those factors in determining my valuation based on earnings per share, and also use free cash flow, which is going to take into account how much capital they're going to be putting back into the business. Many analysts see that earnings per share next year is going to be at $12.36. That's what I'm going to use for my earnings per share valuation on the company. It's good to see that earnings per share is rising and is expected to rise in the future. CNBC also puts the stock as a rising earnings per share rate. Their forward PE is only 8.6, which I think is unfair. I'm going to use a higher PE. I think could be a multiple expansion, especially if the company keeps growing their revenue and it keeps doing it in a profitable way. I think more investors are going to buy into the stock because it's a very good value proposition for an investor. I'm also going to use free cash flow, and the company has been growing their free cash flow. Very good, Crocs. And I'm going to use this cash flow rate, which takes the last 12 months, trailing 12 months. I'll use that in my valuation. I believe Crocs is discounted by 57%. And I get to that determination because I value the company on free cash flows. I also value the company based on their forward earnings per share. I'd like to take you through those numbers and get to that conclusion of the discount. First is free cash flows. And as mentioned previously, they have a good free cash flow rate. I'm going to take the trailing 12 months and grow it at 6% in the first 4 years. And then in the long term, I'm only going to grow by 3% to get to the terminal value. I'm going to use a higher weighted average cost of capital, mainly because this is a footwear company, and these fashion type companies could be great 1 year and 3 years later. They're not as popular. So I want a higher discount rate, which is going to give me a better return. Based on that discount rate and all these cash flows I expect, I have a net present value of all those cash flows of close to $12 billion. I'm going to add the cash on the balance sheet and take away debt to get to an equity value of $10.1 billion. The market cap on Crocs is $5.9 billion. So it really computes and gives me a per share value of $166.99. but the stock is being sold at $96.94. So based on free cash flows, there's a discount available on Crocs of 72%. Earnings per share next year, I'm going to use $12.10, which is a good middle of the road between CNBC and stock analysis, and it's $12.10. I'm going to use a higher PE than they've been trading. At 12 is very reasonable. This is a growing, profitable company, and I'm going to grow those earnings per share over time at 3%. Using this formula, I get to a per share value of $123.85. Stocks are being sold at $96.94. So it provides a 28% discount using the earnings per share method. I combine the two, but put more weight on the free cash flow method, 2/3 free cash flow, 1/3 earnings per share. And I get to that blended discount of 57% on Crocs. Looking at where the Crocs stock has traded over the last 12 months, it's down about 9% for the year to date. And I think part of it is the HEYDUDE acquisition hasn't quite been as successful as I think they would have liked. So I think that's holding back the stock. I'm seeing that there was a recent rally here in the months of November and going into December. Now, a lot of stocks rallied during that time. We're in an 8-week rally, which has been really fun to watch. But overall, I think Crocs is still discounted for the year. There's a pretty significant difference between the price, the value that I calculate on the stock, and where they're being traded. So it's really interesting to see that this might be a good recipe for a value investor to pick up some shares. So should I buy or not buy Crocs shares? Let's take a look. So first, starting with the company, do I want to be a part owner in this business? Do I like the business? Do I like the management team? And it's yes to all the above. I think the company is doing really well. The management team is really hands-on and creative. I know the HEYDUDE acquisition hasn't been a home run, but I really do give them credit for trying to grow the company and trying to resemble a company similar to Decker's Outdoors, which has been super successful, and that stock's really flourishing. The debt is under control, and it's less than 3 times EBITDA. They offer a nice discount on the stock. So I'm going to be buying shares of Crocs and building a nice position in this company. I currently don't own any footwear companies, and it would be good to have one so that I could have a good stock in that particular category. Thank you for watching the video. I hope you found it interesting. I'd love to get your comments on this company. Again, I think the shoes are really interesting. It's not something I wear. I'm thinking I might buy a pair just to kind of experience what the heck people are talking about, because it seems like everybody I talk to that has Crocs is somewhat of an evangelist. They kind of tell you, hey, I thought they were a little weird looking, but once I wore them, they're so darn comfortable and really durable and useful that I ended up, using them, especially at home when I'm just, maybe doing some garden work or walking around the house or going for a walk. People that I talk to that own Crocs are really, they evangelize the brand. So I'd like to experience that and see what they're talking about. Do me a favor and like my video and subscribe to my channel. I'd really appreciate that. Hey, happy holidays and good luck investing in 2024.